Welcome to Trader Merlin Show. It is your Thursday edition. I'm alone in studio today. Do not fret. We've got a bunch of stuff that we can talk about. Hello, everybody. Good to see you, Tom Messina. And yes, it is almost Friday. I hope that foot is on the mend. Actually, tomorrow will be a different show. Normally Fridays I do solo, but we're going to have Mike Sirik on the program tomorrow to talk about market profile. It's a pretty popular analysis tool out there, a way to view the market. So we'll talk about that on tomorrow's show with Mike Sirik. Les, good afternoon from Cape Canaveral, Mr. Barr, and Jerry. Good to see you guys as well. All right, today's show is all going to be revolving around listener questions. I've got a bunch of them that have come in. We're talking about all kinds of topics, a lot of stuff on crypto, but I have some specific asset class questions, like stuff that was asked about yesterday. I love when my screens don't even line up and things are just a little bit wonky out there today with my charts. So let me fix this for us here so we can get going. So it'll be open Q&A. Feel free to send those on in as we progress through today's show, and of course I'll do my best to get to everybody's questions as I can. All right, so let's go to our first one on this list here. There was quite a few. Let's talk about really being unprepared today. Jeez Louise. I guess I got my earnings and economic announcements first. What's going on there, buddy? Here we go. First piece is this. This is from Larry out there. And hello, Zach. Good to see you. Larry sent in this question that says, I've got 2 option contracts on the MES that are deep in the money. Since they expire in 8 days and I let them expire then, do I own them? Yes. Okay, It's a little tricky when you're doing options on futures, but some are cash settled, some are deliverables. With this option, obviously, if you're in the money on options and you're in the money, that you're going to get exercised. So essentially what will happen, since you were deep in the money on these ones, you will be put the futures contract. So you will now own those futures contracts. Now, unfortunately, or depends on how you like to look at it, those futures contracts for the indexes, I say generally, are going to be cash settled. So you're going to receive those MES futures contracts. I think you're in the MES 11, MESM 21. You'll receive those in your futures trading account, and then you have to manage those accordingly. And if those do expire worthless, then you will, not worthless, if those futures contracts expire, they'll simply roll into the next contract if that's set up that way, or it'll be cash settled and the cash will be put into your account. So yes, you will be exercised the MES on those options if you're in the money at expiration, but if the futures contracts expire, not necessarily a concern of yours because the MES is a cash settle, which means the cash will just get put in your account. Now, this is really important if you're trading some asset classes. There are others that are deliverable, meaning you could be forced to receive, barrels of oil or lean hogs or corn or whatever that asset class may be. So if you're trading futures and you decide to hold through expiration, always make sure you check, go to the CME website or whatever futures exchange you're using and check and see what the deliverability of those is, if they're deliverable or cash settle. The last thing you want to do is end up with a truckload of lean hogs or 1,000 barrels of oil on your front doorstep. So that was number one for Larry. As far as them not gaining in value, remember, if you're holding options, they're decaying very quickly. So you have the difference, but how much you're in the money on them. That is obviously the physical value of that option. But you also have that time element to it. And the longer time you have, the more time you have, the more value that time value has. And as you're getting now towards the end of that contract, it's just decelerating very quickly. You're losing that time value, which you'll always keep the intrinsic value. All right, what's the second one here? This was from Sarah. Sarah says, like to talk with Tilly. It's Tilly. On breakout trades, can you analyze the NASDAQ for a potential trade? Well, we looked at that yesterday. If I'm not mistaken, I think we actually did literally look at the NASDAQ. And Sarah, I don't know whether you want to look at the NASDAQ 100 or the NASDAQ futures, right? But they basically look the same. And here you can see we've still got that sideways range for the better part of almost 3 weeks now for the NASDAQ 100. And that's despite Facebook having those great earnings call, Apple having a great earnings call. And if you saw what happened with Amazon after hours, it's also soaring pretty good. Let me just bring up Amazon for you guys in case you haven't seen that one. AMZN. It was doing very good in the after-hour session. So here's your 5-minute of Amazon, and there is your 24-hour. So you had a pretty nice pop. It wasn't a double-digit gain, but it went from about 3,470 all the way up to 3,670. So a pretty nice jump there right now at 35.90. All in all, it will be a positive day for Amazon tomorrow, most likely. So you would think that as well as, let me zoom out just a hair here so I can get Facebook's in this one. Here's Facebook's earnings announcement, which was a screamer after hours yesterday. You also had Apple, which was a screamer after hours yesterday, but really gave it all back today. You guys notice a pretty sharp sell-off there on the open for Apple, and I think that's part of the reason you saw the NASDAQ held in check. Now, to Sarah's question, potential breakout, here is the NASDAQ 100 ETF, the triple Qs. And you'll notice that today's price action, you did open up outside of our range, but it came right back in. And technically, we're still in that range. So, Sarah, it really depends on trading style. This isn't, a clear cut, you have to trade it this way. We all have different ways that we would trade it. If I'm looking at it from a swing trading perspective, meaning it's going to be a little bit longer term, maybe a couple weeks, or position where it's really saying months type of trade, I'll wait for it to close above or below that range. So if you look at that price chart again, you can see we've got this pretty wide range. I'll put a yellow box to make it real easy for all the viewers at home. Of course, it's on snap mode. This little yellow box I'm drawing represents kind of that range it's been in for about 2 weeks. Now, if we get above that and get a closing price above that, then that would be an opportunity to go long on it. If we get a close down below that 334, that would be an opportunity to potentially go short. Now, there is clearly some opportunity within that range. As you guys can see, it's been bouncing quite a bit. It's still a $9 range, well, $8 or $9 range for the NASDAQ 100, which does present some opportunity. There was an opportunity today, as you saw it gap up and then start to sell off, a potential short there. But that's how I would look at this, Sarah. I know a lot of other people might look at it slightly differently. That's okay. This is just one of the ways that I would trade it. Now, if I'm a shorter term guy, and this is where you have to put on different hats, as a day trader, if I saw it break on an intraday basis, let's say a 5-minute candle, I'm going to jump on that trade because I don't have the benefit as a day trader to wait for it to close and form. I may miss the move. So this goes back to the discussion we've had many times in this program about trading style. What are some of the risks and rewards of various trading styles and how we act as traders on those? So from a day trading perspective, I'm looking to jump on it right as it breaks above that line or below it, especially if it starts to come back in. If it's a gap up like today, started to sell off. I was busy in the morning, so I missed that initial drop, but there was a second, it bounced and then did a second leg down on the NQ, which I ended up catching this morning for a little bit on the futures. I'll show you the, this is the NASDAQ 100 ETF. Let me go and show you the NASDAQ futures here, and then we'll just make this a 5-minute. And you can see that it sold off pretty aggressively. We got it all scaled up. Sold up pretty aggressively, and then right around an hour into the market, it had a little bit of a bounce, and as it broke those lows, I caught a little bit of this move down here as it was taking out the lows and making new lows. So that was a nice little opportunity. Unfortunately, I missed the bigger part here, but it would have been a good opportunity as it opened up outside that range and then came back in. What else? Is there any significance with QQQ if today's candle engulfs the previous 3 days? Yes. Let's go QQQ. And we'll go back to a .D. So normally I would say yes, Mike. He says, is there any significance with the QQQ if today's candle engulfs the previous 3 days? Well, this is where it gets technical and people geek out on different trading styles. But for me, I don't call this an engulfing formation. And the reason I don't call it an engulfing formation is this red candle, this red body right here, needs to be engulfing them. If it does, that's obviously a much weaker sign for that day's trading. Now, clearly it was weak because it was a red candle, but remember, we gapped up. So all in all, the NASDAQ was up today, even though all you're seeing is red on that candle. If this candle, in fact, closed down here near the bottom and it was just a giant red candle, then it would have a lot more meaning to me. There was a lot more pain on that specific candle. And in this case, I don't see it as necessarily being an engulfing pattern for me. But some people will include that tail as part of the engulfing formation. I don't. I'm looking for the real body, which is the red piece here. And to me, it didn't engulf the previous 3 days. But that's a great question, Mike. Thank you. All right, next on my list. Oh, boy, there is a whole bunch of different things with this ball of worms. Can of worms? Who buys a can of worms anyway? I don't think I've ever bought a can of worms. Great question from Geo Joe. I'm guessing it's not G.I. Joe. It's Geo Joe. It says, would you please explain the differences and similarities of Bitcoin and Ethereum? And you also had Litecoin on here, too. I don't know why that's not on there. Contrast and compare. Is Ethereum actually a coin like Bitcoin? What is the future of these two cryptocurrencies? So far as I know, that I cannot go to Starbucks and buy one cup of coffee with either one. Well, that's not necessarily true. You can buy Starbucks. You can if you use the backed card, but it's really kind of a cumbersome process. So I'll real quickly explain these two. I know we've done this in the past, but if you look at the structure of them, they're both right now proof of work, which is the basic consensus algorithm behind the scenes. It's how they make the blocks of data and the mining and all that, etc. Ethereum is actually switching over and now going to proof of stake, which should be implemented here soon. Now, what's the difference? Obviously, Bitcoin was designed to be exclusively a payment system where I could send you money and you could send me money and we get around any intermediary. That's what it was designed to do, according to the white paper by Satoshi Nakamoto. Now, if Vitalik Buterin in his brilliance said, that's great. I love that I can send money back and forth, but why can't I use that to send code or attach code to it and make things like smart contracts? So the main difference here, at least from a protocol, meaning what do those programs do, Bitcoin versus Ethereum, is Ethereum is a programmable blockchain where you can actually plug into their blockchain. Yes, they are their own coin. If they have an established blockchain of their own, then they're a coin. If they plug into someone else's blockchain, then they're a token. So at this point, both of these are coins, right? So Bitcoin and Ethereum would be their own native blockchain, therefore they're coin. The big difference is obviously the programmability of Ethereum, which gives it much more scalability, meaning it can do a lot more than just send money. If you look at some of the benefits of Ethereum is block settlement time. So one block of data for Bitcoin is about 10 minutes worth of time. So yes, you're probably not going to go buy your cup of coffee with it, right? With Ethereum, it's around 15 seconds. So, you're at Starbucks and you're going, okay, I want to pay. I could pay with Ethereum, and normally what they'll do is, it's not that your transaction is permanent in 15 seconds. Usually what they'll do is they'll wait 6 or 8 blocks of data to make sure that that is an irreversible trade. Because if it's only one block old, you can break it. You could change it. But once you get deeper into the blockchain, it's almost impossible to change those things without rolling back the whole blockchain, and nobody would want to do that. Now, it has happened before. However, so from a transactionability perspective, Ethereum is, from my perspective, far superior than something like Bitcoin if you decide to use it for every day-to-day operation that you would do like a Visa card. It's still too slow. Now, there are other ones out there. EOS is one that I've been talking about quite a bit that has almost instantaneous block time. I mean, it's just super fast, and it can handle a lot more transactions. So if you're looking for something to buy your cup of coffee with, probably not going to be Ethereum or Bitcoin. But there's fundamental differences in all of these, and as we run through them, there's thousands to look at, and Brendan is pretty well versed in them as well. Every one of them brings something to the table, except one, and that is the ultimate crap coin of them all, which is Dogecoin. Now, most of these programs are trying to solve a function. They're trying to find a problem in our current system and saying, how can I fix that? Bitcoin was about money. Ethereum looked at the whole ecosystem of finance and said, wow, what if I can get people to do their own investing or DeFi? What if I could get people to write in smart contracts and have other organizations attached to my blockchain? That was Ethereum's initial vision. But you have a lot of other ones where it says Algorand, that's another big one. And will it eat EOS alive? I don't know. It doesn't do anywhere near the transactions that EOS can do. However, it's got more backing and development. When I made the joke of talking about something like Dogecoin, these programs like Ethereum, like Bitcoin, like Algorand, like Ripple, since Brendan just typed in the chat, they all have taken some of the money that they've made from these ICOs and their tokens and coins, and they're investing in developers. They're building out the projects. They're making it bigger and better and developing it, and hopefully going to be a mainstream niche. When I make a joke of Dogecoin, it's because Dogecoin doesn't have any of that. They have no community of programmers that are improving it. It was a money grab, and all that Dogecoin was, guys, was a copy of Bitcoin's code. They literally did a copy of Bitcoin's code. You tweak a couple things and you make it your own. And don't think that is a shady thing to do. Probably 40 or 50 of the cryptocurrencies that are out there, maybe even more than that, are direct copies of Bitcoin's code. For example, GeoJoe, and I don't know why it said Litecoin earlier, in comparing Litecoin to Bitcoin, all that Charlie Lee did, and a couple other guys, is took Bitcoin's code and changed everything by a factor of 4. So instead of having a 10-minute block time, Litecoin's is 2.5. Instead of having 21 million Bitcoins ever, well, there will be 84 million Litecoin ever. Why? Factor of 4. They just multiplied everything by 4. So they've gone off and changed because now there's a development team at Litecoin and they are building and changing the protocol pieces to make it better. But initially it started off as just a pirate of something else, as a lot of these cryptocurrencies do. So to me, it's important that if you do decide to get in there, Joe, that you kind of say, what am I looking for? And as I've shown you guys my portfolio many times, I'm looking for 3 main things. Number 1 is going to be the store of value. That's why most of my portfolio of cryptos is in Bitcoin. Number 2 is programmability. And I've looked at things like, I think Ethereum is the top dog there, but one that's really kind of jumping on the bandwagon and dominating right now because they are putting so much money into development is the Binance chain, all right? BNB would be another one. Then I look at things that might be, actually there's 4 areas, right? The other one is going to be transactional. And for that one, I'm just looking at whatever's got the highest transaction volume. And one way I did that, let me see if I can bring it up and see if it's still up here. You can go to blocktivity.info. Let's see if I can bring it up for you guys to share it just so you can see it. They changed their website, which kind of sucks because I had it all down earlier. Here is blocktivity.info. And basically what it'll tell you is, you know, how quickly these things are transacting. EOS really dropped down the list. I don't know why this was down here. At one point, they were doing 50 million transactions a day. Now, if you look here, is, you know, Telos did 17.9 million transactions. That is huge, right? That's a huge amount of transactions. And you look at WaxP, they did 12 million. Well, you got into something like Bitcoin, and Bitcoin only did we'll call it 700,000 in the last 24 hours. Now, this site used to tell you what the max was and how maxed out the network was, which is a really important thing. Let's see, does it do it? Broke activity. Unfortunately, it doesn't give a little speedometer piece. There used to be a speedometer that would tell you how bogged out the network is. But unfortunately, this one has changed here recently. But again, from a transaction ability, I might look at Telos and say, okay, I might add some of that to my portfolio because they're doing the most transactions. At some point, somebody is going to look at this and go, okay, we need to have a Visa type mechanism. And who can handle that type of transaction? I'm going to look to see who does the most. Then the 4th level is side projects, right? When I mean side projects, ones like Civic, which is an identity token, or some of these other ones that I showed you when I showed you the ecosystem of DeFi. And there's a lot of different DeFi projects out there that have their own native token, and you kind of have to step back and say, you know, do I like SushiSwap? Do I like PancakeSwap? Do I like... And figure out which one do you think will be the dominant player in that space. And there's a lot of different market fragmentation going on, Joe. So, you know, it's challenging to say that one is the best. And I think that this is why it's critical that if you are getting involved in this space, that you split out your portfolio and really spread it around. I think at this point I've got like 19, and that doesn't include the dozen or so little airdrops I've gotten from holding other tokens. I was going to create an ETF inspired by VIX called RNG Fund, where RNG stands for Random Number Generator. Doge inspired me to get... Well, I mean, if you look at the 2 guys that started Dogecoins, I mean, you talk about being in the right place at the right time. You know, they're filthy friggin' rich right now, and they really didn't do anything but copy someone else's code. Remember, because it's open source, there's no copyright there. You can take Bitcoin's code right now if you want to, and you know, build your own coin off of it. What I'm looking to do is actually build a token that goes onto Ethereum's blockchain, and that's been a slow process. Learning Solidity is not my thing. I'm not a coder, but you have to learn these processes to help build those out. So, Joe, I hope that answered your questions there on Ethereum versus Bitcoin. It's like saying, you know, it's the Honda Accord, your store of value, or it's, you know, a BMW. They're very different vehicles, and all depends on what your goal and objectives are. I like to spread it around to different projects. Brandon, I haven't heard of DeFi technologies, but I am definitely a fan of all DeFi, so I'll check them out. All right, I will keep going down that avenue here. Oh, I guess I was wrong. So that original question that came through, I'll show you here, was from Geo Joe. And then there's a couple here from Otto. It says, would you please compare Bitcoin, Ethereum, and Litecoin and share your views? Which one is a stronger trend currently, as well as low points? Here's my thoughts on this. I have, in that order, actually, that you have them there, Bitcoin's my number 1 holding, Ethereum is my number 2 holding, Litecoin is my number 3, and I really had thought about dumping my Litecoin. And here's the reason. I think initially Litecoin was designed to be the silver to Bitcoin's gold. If I'm going to break my portfolio up enough, I've got the Bitcoin piece taken care of. I don't necessarily need Litecoin, right? If I'm looking at that 4-part fragmentation I just talked about, which is the store of value, Bitcoin, the blockchain, which is programmable, which people can attach to. For now, that's Ethereum for me. It will probably be Binance in kind of a symbiotic relationship with those two, Binance and Ethereum. Number 3, I'll start to look at the transactional scalability applications, and then I'm looking at very specific targeted applications. Litecoin, where does that fall in this one for me? If I'm worried about transactional speed, 2.5 minutes is still not going to cut it. So Litecoin doesn't really serve a purpose for me, particularly from a transaction perspective. Not that it's bad, but it's like I've got the store value taken care of. I don't need Litecoin for that. I'm looking for transactions. I don't necessarily need Litecoin either because it still moves too slow. That said, I think that the team at Litecoin has been much more aggressive in pushing for adoption of Litecoin, which is why I still hold it. But in the long term, I just don't see it being needed, really, in the ecosystem. Okay, let's see. That was it. So there you go, Otto. Next question. This was from yesterday's chat. And again, if you guys have questions, send them on in. I'm happy to do whatever I can and get to listener questions today. This is one that came in from yesterday's Trader Merlin chat, which was about GME Gamestop. Oh boy, so excited about GameStop. All right, here's our chart of GameStop. I think everybody who knows me knows exactly what I'm going to say on this one. Why bother? It's not really, it looks like it's just floating sideways right here. If you're looking to trade it, certainly it could offer some intraday moves, but am I really interested in it? Not particularly. I don't find this thing anything technically of value here where I would look to run into it. Now, maybe you're thinking, hey, from a fundamental perspective, I love GameStop. I've got to buy it. Do you? Do you really? It's losing $3 per share. And here you're going to pay $176 for a company that's losing $3.31 per share because it's being held up by these diamond hand Reddit traders who aren't going to sell. Look, this thing is going to end up, Mark, I will bet anybody, if anyone wants to take the opposite side of this bet, this is a safer bet than me trading GameStop itself. I will bet anybody, and I'll give you 2-to-1 odds, that this thing, within the next 5 years, will be under $20. Well, let's make it 2 years, under $20. Okay, under $20. I'm going to take that bet. I'm not buying any video games at GameStop, so I don't know why you'd want to hold this. People are getting caught up in the hype of GameStop because of what's happened with the Capitol Hill and the Reddit traders. Guys, this thing is... Oh, they got rid of their CEO. Who freaking cares? It's GameStop, for goodness sake. Anyway, sorry. Yes, Charlie. You know what? When Charlie Lee, Brendan says Litecoin equals Charlie Lee. Charlie Lee, back in 2017, he sold out of 100% of his holdings of Litecoin. He's one of the original guys that started it. And he said, look, and he made a big announcement on his Twitter feed. He's like, look, we're headed probably for some dark times in crypto space. I think it was $330 or $340 per coin he got out of. He said, look, I'm just getting out. I'm taking my profits. He gave a bunch of it to charity, made a ton of money, and he was very clear. He says, look, it could continue to go up, but having got it where I did, and I'm getting out right around 350, I'm totally fine with that, and maybe I'll buy back in later. But judging by what's happened with price, it's most likely going to go down, and he was right in a big, big way. Now let's see if we can get back up to 350 on it. Let's see, what else I got here, Ron? Can I take your side? Chip in 1,000? Sure, if anyone wants to take the opposite side of the bet. What do I think about the $90 billion Apple share buyback? That's just the classic move that all companies do to prop up their share price. So if you do big buybacks, and it's not just Apple, it's anybody does buybacks, That's clearly going to help the share price, right? Because you're taking float away from the market. Those shares are no longer going to be purchased on the open market. They're now going to be shelved and retired. So all of a sudden, you have the same share price with fewer shares out there. Price will naturally rise. So it's a typical tactic done. And the reason that companies will do this is when they don't see an area to invest or to take that money and get a greater rate of return on it, then they'll go and buy their own share price and help prop up their stock. There you go. Okay, so I forgot who said that one in the chat yesterday, but there you go. That was your GME. This one came in last night. I'm blessed to have bought Seagate last June. I'm thinking of selling. What are your thoughts? STX? Is it STX? Yes, STX. So here's the STX chart. You said you bought this last June, Lee? Congrats, man. Uh-oh. Did my computer lag on you? Should have been okay. If you bought last June, let's go out and see where June was. Goodness graciously. I'll put a couple vertical, I'll put a box around June of last year just so you kind of know where we're at. So you bought somewhere in that range there. So you bought somewhere between $46 and $55. It's currently trading at 96. My attitude, you can't go broke taking a profit. You know, did Seagate reinvent the hard drive? Did they do something crazy with storage? I don't know. But, I mean, that's one hell of a chart. Lee, I think you got lucky on this one. I most likely, if this was me, I would take at least half off the table and then set a trailing stop for the second half. That's the least I would do. I might even take 3/4 off because it's just gone absolutely parabolic in the last 6 trading days. I mean, that move you've seen is just incredible from the 23rd of April. What's interesting for me really is the fact that volume isn't that big of a deal. Volume really is just kind of normal volume, but huge spikes up in price here. So I have no clue exactly why that is, Lee. But to each their own. For me, I'd be very happy with 100% rate of return on this one in under a year. Just dump it. Take profit. You could go up to 100, could it go up to 200? Sure, anything's possible. But here's the challenge I have for people like Lee. And sorry, Lee, if I sound mean and condescending here, but you bought this thing, I'm going to say $50. What was your target? Was it 60? Was it 70? Or was it just, I just want to make money? I mean, this is the problem with so many traders. They don't put that sort of numeric accountability and say, yes, when it gets to this point, I'm going to get out of my trade or I'm going to reevaluate, set some trailing stops. But with no plan, I mean, you're basically grasping at straws, and chalk this one up to you just got lucky. So I would put a trailing stop on it, sell half of it, put a trail for the second half. That's what I would do because that chart is beautiful. You did great on that one. But remember, we're in probably the strongest, most manipulated bull market in the history of the financial markets on a global level. It's not just the U.S. that's doing this. We're seeing this across the board. I mean, I did some numbers today. I look at 412 stocks. So basically, I have taken the S&P 500 and I break out a lot of the junk that I'm not going to look at, penny stocks and super illiquid things. And it leaves me with about 412 different stocks to look at on a daily basis. 65 of those are above the upper Bollinger Band. Remember, with statistics, 2 standard deviations is supposed to incorporate, I believe, 96% of all of the data should be within 2 standard deviations. Well, if you look at the math on that one, 412, you got 65 are outside the upper Bollinger Band, and you have 7 that are outside the lower Bollinger Band, meaning that they're way oversold compared to normal. So you're looking at 72 companies out of 412. I mean, that's a pretty significant number. What are you going to call it, 40%? Sorry, not 40, 20%? That's an overheated market right now. And to me, that's a bit of an outlier overall for our markets to see that. And I'll show you guys what I look at. I simply do a scan filter right here. And on the left-hand side, I just look up Bollinger percent beat. So you can see right now I've got 8 are down below the lower Bollinger Band. So these guys right here in white are all below the lower Bollinger Band, and that means that they're oversold. It doesn't mean they can't continue to go down, but they're just oversold. And then look at these guys. Everybody here that's over 100 is outside the upper Bollinger Band. That's 81 companies. So it's actually changed as of today. I've got 88 companies that are either above or below the upper Bollinger Band. That's 88 out of 400. That's 20%. And, that's not normal. I mean, things are really, really hot right now. When there was nowhere else to turn to invest, you invest in yourself. You should, and actually, Andrew, I would backpedal on that one. I would say you should always be investing in yourself, regardless if there's somewhere to turn with the financial markets. You should always be putting money into making yourself better and better and better at this. By the way, you motivated me to start my trading plan. Hey, excelente, good, Thomasina. It's one of those things that you'll find that as you start to write your trading plan and you're writing these things down, you're going through your head saying, what's important for me? You start to dig into your trading past as well and say, what have I been doing wrong? Or what do I think I've been doing wrong? And now you can go back and look at your trade sheets and say, hey, you know what? I have in fact been doing this wrong. Now I'm going to make amends to that and try to fix it so I don't make that mistake going forward. That's the first step in developing consistency. So awesome. I'm very happy you started that one. I hope everybody at least has some form of trading plan down and is working to get it better and better and better. It says that could just be hard drive mining crypto pumping this up. I don't think that's it. I don't know. Hard drive is really that necessary for crypto mining. It's the GPUs that are big for the mining perspective. A hard drive's no big deal. It's not really that required. Let's see. I have my trading plan dartboard. I label one section. Somehow I don't think that you're joking with that one either, Brendan. You're like, oh yeah, well that's a buy over there, that's a sell over there. One of these days I will do an experiment. I just haven't, and maybe I should. I've got some capital lying around, and I should take like 50 or 100,000, and every day I'll be able to make a trade that represents 1% of the portfolio. And what I'll do is I'm literally going to throw a dart at pick the Wall Street Journal or any other publication where I can get a list of stocks, or just have some Tom, can you create a random stock ticker generator? And just generate a random ticker. And certainly that ticker would have to have a certain amount of volume, right? So nothing under, let's say, 2 million shares traded per day and no penny stocks. And the whole plan is I pick one security a day, risk 1% of my portfolio, have a stop loss on that bad boy. If it's in an uptrend, I trade my normal share. If it's going against the trend, let me rephrase this. I pick that ticker symbol. Let's say it's stock ABC. All right, great. I flip a coin. Heads long, tails short. Oh, it's tails. If that stock is in a downtrend, I trade normal size. If it's in an uptrend, meaning it's going to be going against the trade that I want to do, then I'm simply going to do 1/2 the normal size. I'm willing to bet you that if that is automated and it's a very simple strategy, that you'll make money over time as long as you keep a 3-to-1 reward to risk ratio and you go predominantly with the overwhelming trend. So Chinese gamblers bought hard drives to shortage in China. Huh. I didn't know about that one. All right, let me go to some other questions here. What else did I have? I did that one for auto. Okay, this is an interesting one that came in the other day. Right here. We have something very exciting happening in a couple of days. Right now, most of you, or most people, I would say, not just you guys, but most, are going to have a hard time trading the Bitcoin futures contract. It's just too big. It represents 5 Bitcoin. So you're talking a very expensive contract. Now, the question that came in chat yesterday was asking, could you talk about Bitcoin micros, the micro contracts? And this is absolutely, I'd love to. So let me real quickly show you here the cryptocurrency futures as we have them now on a centralized exchange. I don't want to hear it, Brendan. I know you're like, you can trade futures on Binance. I know. I'm talking about regulated securities exchanges, not derivatives markets or derivative DeFi programs. For right now, we'll stick with just the current ones that we have. So you notice at the top there, it says Bitcoin. The future would be Bitcoin. Its ticker is BTC. That is 5 Bitcoin worth. So that portfolio, if you look at Bitcoin as we speak, is trading at, call it 53,000. Let me bring up a calculator here and you just, oops, why is my calculator not popping up? I love when things just don't want to work for me. There we go. 53 times that by 5 just to make it easy. You're looking at a contract that's $265,000 worth of Bitcoin. So they're not going to let you, that's a huge amount. So what you have with the BTC futures contract is for a $5 move in Bitcoin, it's $25 worth of value in that futures contract. Because of that, because of the volatility with Bitcoin, the CME is requiring 60% margin. Okay, so 60% margin would get you to about $100,000 margin per contract. So if you want to buy one Bitcoin futures contract, you got to have $100,000. I think that's a little bit excessive, but that's what they started with. And I know some people might not like this, but I think it was actually a good idea. And the reason for that is it's so volatile that let's keep the retail investors out of Bitcoin futures for now by creating a product that's so big that they can't afford it. And I think that was what the initial intent here was with the Bitcoin futures contract. Now, it's not like a super popular one. It's not trading, hundreds of thousands of contracts a day, but it's getting better and better and better the more that people are drawn into the crypto world. That said, it's still damn expensive. So what they created, which is going to be rolled out on the 3rd of May, so we got a couple days left here next week, is the micro Bitcoin futures contract. You look at this, I put an asterisk because it's not there yet. I've been looking at it and tracking it, and you can see it trading. It's kind of weird the way that it tracks, but anyway. If you look at their point value, for a $5 move in Bitcoin, it's only 50 cents. So it's 0.1 Bitcoin. This obviously is a much better way for everybody to get involved with Bitcoin futures, because now you can be trading 1/10 of a Bitcoin. You want to trade a full Bitcoin? Well, you buy 10 of these bad boys, and there you go. Now you got a full contract. And these are micros. My guess is they'll probably create a mini here soon, which will be a little bit bigger, maybe be two Bitcoin or 1.5 or something like that. But they went from the full Bitcoin contract to the micro right away. Now, notice on the screen here also, the numbers don't quite line up. They're estimating right now that the margin requirement to trade a micro Bitcoin futures contract will be about $2,000. That's why I have a little tilde there. It's about, okay? So they haven't really said that yet. My assumption would be it's going to be about 60%, just like it was for the full size. If that's the case, then that should put you, let's see, 0.1 Bitcoin, 5,000. Yeah, that's about right. It should be a little bit less than 2,000. I also put on here Ethereum. There's no Ethereum micro contract yet, but this is also a very expensive contract. When you look at the number of Ethereum that's in that one, if I'm not mistaken, I believe it's 25 Ethereum. Believe. I can't remember off the top of my head, but I think that's what it is. They're also asking $60,000 margin for your Ethereum futures contract. So it's a great thing to see them coming out with the micro. That obviously is going to open the doors for many of you who simply don't want to take the risk of trading, spot Bitcoin and going and buy the different coins from the different exchanges. That could be problematic for some of you. Okay, no problem. You can now be trading the micros. So let me go and bring up the micro here just real quick to see if I can bring that up for you guys. And you'll notice that it's weird on, oh, there's Dogecoin. Look at lovely Dogecoin. Isn't that pretty? Let's go to, it's the MBT, micro Bitcoin futures. You can see it's trading. It's got these weird little dash marks, but officially it doesn't start trading until next week, which is kind of bizarre. Okay? Kind of weird. But yeah, we'll see this become much more liquid because there's no volume on it right now. You can see I'm moving my cursor. There's no volume. Oops, I can add that in. There really should be no volume on this unless it's internal for this futures contract. Right? There should be nothing going on. That's weird. 100 contracts traded on the 18th of February. My guess is that's testing, but who knows? It's interesting because you can't get it on TradeStation, but you can get it on TradingView, who's pulling their data from. It doesn't tell me who. Oh, they're going from the CME. So there you go. So for those who are asking questions about Bitcoin futures and the micros, yes, it's coming. It will be here very, very soon, and I'm actually pretty excited about it because it gives everyone more of an opportunity to get exposure to Bitcoin without taking on that full contract, which was just massive. The other part here to understand is you're not actually trading the Bitcoin spot price. You're trading an average of price. So this was, I think, a very smart move on the part of the CME. So if you remember back when they started, I believe it was December of 2017, the CBOE came out, or it was, yeah, CBOE said, we're going to start with the Bitcoin futures contract. And everyone's like, oh my God. So they came out with theirs, but it was tied to one Bitcoin exchange. It was tied to, I believe it was Gemini. At the time in 2017, Gemini was nothing. I mean, they were a horrible exchange. The platform was garbage. Their spreads were massive, and they did not have any liquidity on Bitcoin. When you don't have liquidity on something, what happens to the spreads, guys? If you don't have liquidity, those spreads get really big, and a small order could move the market very quickly, and that's what was happening. My friend Gary and I, we were looking at it on Gemini versus, let's say, Coinbase, or what was the other one? There was another one. I cannot remember the name of the company. you could have $2,000 or $3,000 differences in price on Bitcoin. And so it was funny because we were arbitraging that. Now, that's the challenge of tying your futures contract to a illiquid exchange and using that as your one source. CME was smart. They use Kraken, itBit, Coinbase, Bitstamp, and there's a fifth one, Gemini. So they use all 5 of those and use an average to get their Bitcoin price, which is brilliant because what happens if all of a sudden a whale on Kraken unloads 1 million Bitcoin? That exchange is going to drop significantly. Now, it would bring all the other ones down too, but you won't get that crazy one-off spike that you could from one exchange, if that makes sense to everybody. Hopefully that helped out with some clarity on that one. All right, what else did I have on here? I think I jumped over some questions to get to these. Got the Seagate question, got the GME, got the Ethereum. Okay, I think I got most of the questions from the viewers out today. Damn, I'm doing good today. Could be done soon. Yeah, I know what you can do with Excel, but I'm just not a programmer. I got to leave that to you and Brendan, the guys that like to do coding. Big coders out there. Bitcoin futures, why the 5-to-1 ratio, Merlin, to trade? Maybe to discourage people. Yes, Jerry, I believe that that's what it was. I believe that they did a giant contract so that the people that were in it were institutions. And if the institutions are in it, they're going to have better risk management in place, typically, than a retail investor. Retail investors don't like to use stop losses, which is why they tend to disappear very quickly. So I think it was a smart move just to see how it worked, right? Is this product going to go away? Is it going to get utilized? Is it going to create all kinds of waves? There's systemic problems. So let's create it so big that the mass population can't access it. And now all of a sudden, okay, it works, it's legitimate. Let's bring it down and get it down to the retail investor can get in. So this micro contract on Monday, to me, just says, hey, retail investor, we got a product for you. Come on in, join the party. All right, you guys got any other questions for me? I just type them on in here as I went through most of the viewer questions already. I don't see any new ones that have come through here, so I will continue to ramble on. So let's go look at, I didn't look at the earnings calendar for today. We did look at one in particular, which was going to be Amazon. And I'll bring up some of the other guys here in a second. It's interesting because if you look at where we are currently on Amazon, you're at all-time highs, clearly. I mean, it's actually, let me check this out and show you guys in a sec. Here is your smaller time frame, 5-minute chart. So it really hasn't done much. Of course, you guys know equities tend to really slow down and almost come to a standstill about an hour after market close. So it's pretty much stuck right now. Now, the other ones that came out with earnings today, you did have a big beat by Amazon. Amazon was supposed to come out at, I think, $9.75, and they were at $15.79, so a big beat there by like 62%. Twitter also came out with earnings, and they're not being well received right now on the Twitter front. My guess is a lot of people are leaving Twitter. I'd be interested to hear the conference call there, them saying that their numbers have dropped significantly, obviously because of what happened with the election. And when you block somebody like President Trump, a lot of his followers are going to go, hey, I'm out, I'm not using Twitter, let's go to some Discord or some other group. You also had MasterCard, and the reason this one's important is because Visa's coming out this week as well. MasterCard reported earnings that were a little bit better than expected, but really didn't move much. What else do we have? Bristol Myers, look up some BMY. They missed and were down. And then the surprising one for me was Caterpillar. So Caterpillar beat handily. I mean, they were up almost 50% on their earnings call. They came out at 287 versus a 193. So they did much better than expected, but we're down 2%. So it's one of those challenging things. You just don't know what the heck's going to happen with regards to earnings, which is why I'm always pounding that drum of leave earnings alone. Let's see. Tom says, what would be a good way to show the value of a stock based on the weakening dollar in TradingView? Example, Amazon versus you can do that. Brandon Wendell is actually probably better at that than I am because I don't use TradingView that much. I mean, I'm using it all the time for graphics, but you can do all kinds of programming in there, and to show its ratio compared to the dollar, it's just a ratio formula in the code. I'll see if I can figure that one out. So you want to see how Amazon's doing versus the dollar, whether the dollar is getting stronger or weaker versus Amazon. I mean, obviously the easy thing to do is put them side by side, but you get a much more clear view when you do it as a formula, kind of like we did with that ratio to GBTC and Bitcoin, right? But I haven't taken the time to do that one, but I will look into that one, Tom, for sure. Oh, I think the smart chips are going to hurt everybody. Anybody who's delivering, durable goods, big ticket items, refrigerators, TVs, if they're not coming straight from Asia, chips could be an issue. All right, I'm going to continue on. That was your earnings calendar. Here is the economic calendar, or earnings calendar for today. I did have that one up there, so I was paying attention. I'm all over the place today. Here is your today. The other ones that I thought were interesting were down at the bottom. You see Gilead Sciences and Merck. Those did not fare very well. Merck was down almost 5%. Gilead Sciences was down 2.33. We had Eli Lilly yesterday. So really a lot of these drug stocks not doing well with earnings. I guess the darling starlets have been financials. If you look at financials, which we can hear in just a second, that has been one of the hottest spots of the market right now, is looking at these financial firms. Here's what we got cooking for tomorrow. Not a lot of major stuff. You do have at the bottom there for the U.S., Employment Cost Index, Personal Income and Spending. You have Chicago PMI numbers, and then University of Michigan Consumer Sentiment data. Canada also has GDP and some PI numbers. And then really the early morning is going to be dominated by the euro with their unemployment rate. You have some CPI numbers as well as GDP for for Germany and for the Italian market. So there you go with your economic calendar and your earnings calendar. Earnings for tomorrow bring us ExxonMobil, Chevron, Phillips 66. We've got some oil stocks tomorrow, which should be an interesting one to watch out for when we look at things like energy. Energy for the past week has been doing very well, but it's been drifting down for about a month. So, maybe a little bit of a pullback on a bigger trend here to the upside. We'll see what those earnings turn out for Phillips 66, Chevron, and Exxon. You also have AbbVie, Newell Brands, Huntsman Corporation, Barclays, and then just as to clean up, Clorox, get it? See what I did there? Clorox Company reporting earnings. That's almost everything here is going to be before market open, which is very typical of a Friday afternoon. That, my friends, is going to pretty much do it for me. I did everything I wanted to get covered. As I mentioned, tomorrow we're going to talk about market profile with Mike Sirik. We'll start right off with that from the get-go. If you haven't heard of market profile, it's an interesting way to look at the markets based off time, price, and volume. And many people feel it's what a lot of the big institutions are using. Sure, I know a lot of people are using it. Well, I think it's just one more tool that we can add to our arsenal when we're looking at ways to analyze the markets. But Mike will join us tomorrow to talk about that. If you have any questions, as usual, feel free to send those on in at TraderMerlin@gmail.com. That's the easiest way to send questions to me, as many of you do. For those that sent in questions today, I appreciate that. So we had, I love when I'm just hitting buttons and on the wrong screen. For those that did send in questions, we had a bunch of good stuff from Larry, from Sarah, Joe, Lee, Otto as well. So thank you guys so much for that chat. Keep it coming. I appreciate it. Give me a little bit of stuff to do some research on. And that said, I will see you all mañana. Take care, everybody.